shadow and keeps on blowing. Such a natural keeps on blowing. Such a natural that keeps on blowing. Such a natural such a natural Caribbean vibe, feel the reggae vibe, time to come alive, come and feel it, can you feel it, can you feel it, moon lights up the starry skies, love is all around. Happy folk go strolling by, enjoying the island sound. This lifestyle's my desire, that'll never change. This peaceful joy at my home, I'm feeling great. I'm so inspired, can you feel it too? I'm so inspired, tell me how are you? Come and feel it. Can you feel?
As we continue here with Talk Anguilla Rebranded Part 2, our final segment for today, Sharmaine Francois, she's the Chief Executive Officer of the National Commercial Bank of Anguilla. She's here with me in Studio A. We're so happy to have her. The NCBA was incorporated in December 2015 and began its operations on April the 25th, 2016. Sharmaine, it's good to have you. Welcome to our program today. I know you have a lot on your plate, lots to share with the people of Anguilla, so we'll get straight into it. Give us a little update on the loans, the portfolio, the moratorium, the special program that ends in September 2021.
Yeah, thank you, Keith, and it's always a pleasure to be on air. Good morning, listeners. So let me start by just speaking to the moratorium.
I want to say good afternoon.
It's afternoon. So I had lunch.
I realize that it's past your lunchtime.
Okay, so we're going to start the discussion with regards to the loan moratorium. Okay, so once the COVID-19 hit our shores in March of 2020, the bank immediately, started offering some kind of relief to our loan customers. And we saw it necessary because the sector, tourism, which is our bread and butter, that sector immediately got affected. So we saw it necessary to start the process early. And so we have customers who came on board from as early as March, and they're still on moratorium to date. Again, the situation has not changed. Some persons are still unemployed, or a lot of persons are still unemployed. And so those persons remain on moratorium. Just to give a sense of when we started the moratorium, we extended it to every and anyone that came in. Yeah. Again, even if you were employed, the moratorium was extended to you. The reason being, persons may be employed, but they have family members, that may have been affected as a result. But now we are now over about 12 months, heading on 13 months into the moratorium. Our regulator, ECCB, has given the approval for banks across the ECCU to extend the moratorium to September, as you just said, September of this year. So that would take the moratorium program to 18 months. What that means, or just to rewind, just to give a sense of what a moratorium is, a moratorium is really a suspension of payment, if I may say, just in basic terms. So where there is a natural event, like a natural disaster, right after Irma, we did the same thing, where you have persons may be affected, not just individuals, but also companies. We extend moratoriums also to companies. So that suspension of payment is to allow for you, because you're not earning, to have a break in terms of making payments, so your loan don't go into non-performing.
So you get some breathing
Yes,
space.
you get some breathing space. But what that does not mean, it does not mean that the interest stops accruing. So every day that goes by, at whatever interest rate that your loan is, the interest continues to accrue. Yeah. So if I give just some quick examples here, if you have a mortgage loan, a value of say 300,000, and your interest rate is at 6%, and say at the point of the moratorium that's a value of your loan at 300,000, that would mean we would be calculating interest on that principal sum, because that principal will no longer be reducing because you're not making payment. So that 6% is calculated on your balance at the point of being offered the moratorium. And so what that would equate to is 1,500 in interest payment. And that 1,500 will be multiplied by 18 months if you stay on moratorium for 18 months. So that would equate to 27,000 ECUS based on the currency of your loan. And likewise, if it's a bigger mortgage or bigger loan, then if you say another example at 500,000 at the same interest rate of 6%, and if your interest is higher, then the interest would be higher, the value would be higher. That would equate to 45,000 at the end of the moratorium, at the end of the 18 months. So what that means, at the end of the moratorium, that interest that would have accumulated would be capitalized, added to your outstanding principal, and then refinanced, restructured. Yeah. Again, that is based if you have regained employment at the end, then the loan will continue as a performing loan. But if you've not regained employment at the end of the moratorium, that loan will drift naturally from the next day into non-performing.
So Sharmaine, especially for persons who are not working, what's the sensible approach, and how can the bank provide the guidance for those persons?
So if you're not working, you cannot do anything about it, because you're not earning. Some persons are just living on the that allowance that is given by the government, and so really that is really to meet their basic needs. So payment of a loan will not be possible. For those persons, what we ask is for you to keep pushing in terms of alternative employment, to see how you can, because 18 months is a long time. One of the things that we have to look as a country, in terms of restarting the economy, there's been a lot of discussions around vaccination, and that is the way out for us. Yeah. Once we can get the herd immunity that we need in terms of from the coronavirus, we can jumpstart the economy, and that is really that's really the solution for us, because we're highly dependent today on tourism. Even in terms of diversification of this into other sectors, that will take time. But immediate solution to tomorrow, if we all get vaccinated. I have gotten my vaccine. If we can get vaccinated, that would help in jump starting, and that would create the jobs, the hotels, the sector will reopen, which is the primary sector. And then that would have a direct impact on the financial sector, because persons will regain employment. Because a lot of times the banks are seen as untouchable. We're not untouchable. What happens in the economy is that it directly impacts us. I can speak to NCBA, and I can speak in terms of just looking at the banking sector right across the ECU. Liquidity has not been a challenge for NCBA, thankfully.
Not been a challenge.
It has not been a challenge. We are way outside of our regulatory benchmarks. Yeah. But across the region, that's not the case, because with greater pressures, financial pressures on individuals, they now have to tap into whatever savings that they have at banks. Likewise, corporations, and even too with the pressures on our companies, they're now seeking more financing to help them through that period. So there's more monies going out instead of monies coming into the sector. When you look at, for instance, right now our portfolio, we have approximately 100 million in loans on moratorium. That 100 million we are not receiving payments.
And that's so right across your portfolio, yeah. Right across.
So there's no cash flow coming in. Thankfully we had good results prior to COVID, so that is keeping the bank, in terms of meeting its day-to-day obligations, and we don't have an issue at all. And that is something that we manage, very closely to ensure that we keep within prudential guidelines, so we keep the bank, safe. So the moratorium, as if I go back to that topic, as I said, we did extend the moratorium to working to persons that have been employed. So we've bucket out the moratorium. So we have persons within the public sector, private sector that's working. But as I said, we've extended the moratorium. When I look at the numbers that we've just discussed, the interest is accumulating. If you can make interest payments, because it's a year into the moratorium, 12 months, we would encourage as many persons to restart making payments. Because, as I said, interest doesn't go away. That interest will be added on, we have persons that are close, so they've marked in terms of retirement age. If your term of your loan took you to 65, the moratorium, when we add on that interest, we'd have to extend that loan, and you may not be able to extend because you at the maximum term. And so what that would mean for those individuals, you may have to end up with a higher loan payment when we capitalize the interest. So what I'm encouraging, if persons can make at least interest payments, and you can keep your principal constant if you want, but it's important that, for the working and the persons that were unemployed now working, make the payments at least at minimum the interest payments, because it will help you at the end. Yeah. And it's something that, as I said, it's important that we educate, because there's a conception that the moratorium is, there's no interest free. Banks rely on interest payment. That's how we survive. That's the bread and butter. That's the revenue of a bank. And if that revenue goes, the bank will shut down. Yeah. So it's not a case where we can waive interest. The interest has to be paid at some point. So it's important that we factor that in.
So while you can shift around a bit on the principle, the interest rate, that is of major concern.
Yeah.
Yeah. Mm-hmm.
Yeah, and so we want to come early. We don't want to wait when 18 months and then we have those conversations on a one-on-one. But it's important that the general public understand how a moratorium works. It's there, yes, to provide the relief. But if we now earning, it's important to restart.
And I imagine you'll be encouraging persons to come in if you have any concerns, to come in and talk
discuss
to the bankers.
Yeah.
Yes.
And we have persons that have come in. We have persons that we've restructured already because they've regained employment, or they've restarted because things have improved in their household. So we have a few, but we'd like to see those numbers moving downwards. As much as it can happen for persons that have not taken. But if you're now in a financial strain, then the moratorium is still available, as I said, up until September of 2021. Yeah.
Yep. Share with us now, Ms. Francois, in terms of the market share. You alluded to it a bit, the financial health of the NCBA going 3 months now into 2021 against the backdrop of that whole COVID-19 pandemic, decline in the job market, and especially in the important hospitality sector. Mm-hmm. You might just want to share with us information on that, the market share and the financial health of the NCBA in the pandemic environment.
Yeah, in the pandemic, we are not, we are affected like every other bank, and more so in terms of the moratorium that we've issued. What a moratorium does, it increases the risk of the entity. So when we issue a moratorium, it says that loan is no longer, the credit risk has, sort of impaired. Yeah, because the conditions of the borrower has changed. So that borrower may be unemployed, or the income has reduced, some elements of that. So it increases our risk.
So how is the bank managing that risk?
So managing that, we have to make provisions for that risk. So provisions would be taking part of your earnings to cover that risk. And once you take part of your earnings to cover that risk, it also has implications for your capital, which is critical for survival. Yeah, but that's the reason for the capital, to cushion against those kind of shocks. So it's something that we on a monthly, prior to COVID we would do semi-annually, quarterly, sometimes stress testing, but we do it monthly now because of the environment, just to stress the portfolio to see how we're doing on a more regular basis, because we don't, at the end of the day, you don't want any surprise. But notwithstanding, I can say for the financial year ending October 2020, I mean, our fundamentals have remained strong. The health of the bank, financial health of the bank remains strong. In terms of all the key indicators, our capital ratios remain within benchmark. Liquidity ratios remain within benchmark. I mean, obviously you have, in terms of your margins are narrowing. Persons, we've worked with our customers that need, in terms of some kind of relaxation on interest rates, and see how we can work with customers. So we will, obviously the margins will decrease, but as your margins decrease, you manage your costs. So we've been doing a lot of that kind of balancing to ensure that we keep the bank safe. So that is where we are. One of the things, in terms of market share, we have not lost market share, notwithstanding COVID.
You've gained?
We've gained, not significantly, because you have to manage growth in this period. Yeah. So we currently, in terms of market share for loans and in terms of deposit base, and we are at 65%, loans at 55%. So we retain our current market leaders in all three areas: deposits, loans, and total assets. So we are the leaders, and it's important. I mean, and that is our local bank. Yeah. And so it's important that we maintain that. So the narrative around the bank has to be sound. Yeah, because bank, we survive on reputation. Yeah. And so when there is the wrong narrative, it affects the entity. Yeah. And so for me, I mean, I'm not Anguillan, but I'm the CEO of the bank, and I have the interests of Anguilla at heart. And so it's important that we, because NCBA plays such a significant role in the economy, owning 65% of your deposits, we have, all people say 65% of Anguillians locally and abroad, their monies are with the bank. So protection of those depositors, is important. Yeah, it's paramount for us. So the narrative is critical. Yeah, to ensure that we keep the bank stable. That's Anguilla. NCBA is Anguilla. Yeah. It's owned by Anguilla, and it's 100% owned by the government of Anguilla, which is Anguilla. Yeah.
You began your operations on the 25th of April 2016. The audited financials, I understand that there could be some good news coming at last in terms of a public release of the audited financial statements of the bank. And perhaps you might share that with us, and also give us some sort of an early analysis, if you will, of the numbers, in terms of the preparation of the audit and so on and so forth.
So there's some good news, because that has been a long outstanding matter. And so we've completed all the non-consol. So we have all audited financial statement for NCBA. Yeah, so that we will be presenting. We're planning a media launch, a public launch, so that we can present those numbers. Yeah, and we'll have copies of the financial statement. It will also be on our website once the consolidated is completed, and that will be on the website from sometime early April. We'll have that on the website. So that's, but the NCBA audited accounts is for 17, 18, and 19 that is completed. Yeah. And what in the early years, 2017, 2018, the bank made losses. 2019, the bank made a significant profit. Yeah, and those numbers we will share once, publicly, in a couple of days. But what is important is that the bank is stable. Yeah, there's been a turnaround. In the early years, 17, 18, these were the years of recovery, trying to recover. But we now on a sustainable path. COVID has tried to rock the boat a bit. Yeah. But we continue to push to ensure that we maintain the stability of the bank. But we'll have a separate where we'll crunch numbers, we'll discuss numbers in a couple of days, weeks. Yeah.
And for the record, who prepared your audited financials?
Deloitte.
Yeah.
Okay. Out of so that we use the office out of Barbados. Yeah. So that's completed. And so 17, 18, 19 will be presented. Yeah. We'll be deciding on a date. The media will be invited, and as I said, we'll open it to the general public that wants to come in You can view, you can ask questions. So the audited statements are there.
And they'll be published on
And
your
they'll be
website.
published on the website.
So
Yeah.
there's be a public
Oh,
offering.
yes. And then thereafter, we will be on stream. So there'll be not that outstanding or the breach of the Banking Act being, will no longer be an issue because we'll be up to date in terms of presenting financial statements. 2020, we're in the process of completing that. And so that will be made public. And then thereafter, for 2021 and going forward, we will operate within the 90 days that the Banking Act stipulates.
Yeah. Let's move now to the bridge bank status, and I want you to explain what exactly is a bridge bank, and perhaps even looking at the rules and maybe the procedures applicable to a bridge bank.
Okay, so a bridge bank is normally set up out of a failed entity or entities, and so that's how NCBA was formed. So it's a short-term arrangement for possible sale. Yeah. The Banking Act though allows for one, the bank could have been sold, yeah, or the bank could be capitalized in terms of getting out of bridge bank. So you can either sell or you can get recapitalize and strengthen the entity. So we took the route of recapitalization and strengthening the entity. The option of selling the bank, like NCBA under a bridge arrangement, which is current, if an investor coming in and purchasing a bridge entity, you get very little. You can lose the true value of that entity because of the current state. But if you purchasing where the bank is a commercial entity, then you can demand you can get the true value for that entity. So over the last 5 years, we've done a lot in terms of improving and stabilizing the bank. So there was an injection of new capital by the government in 2018. So so we've met the minimum paid capital requirement of the 20 million. Current paid up capital is at roughly 59 million. So we were above that. Yeah. There's also the issue around completing the purchase and assumption agreement, the put-back process to move the assets from legacy entities into NCBA. And so all of that process was completed. That was completed in January of 2020. And so during that period, I would say all of late 2020, 19 into 20, and so forth, we've moved in terms of the bank into a more sustained, profitable entity. So a lot of the issues that we had in the early days with regards to liquidity, tightness, we had issues around capital ratios, we had issues in terms of losses, the bank making losses. That is no longer. So we were able, the bridge bank application, the bridge bank status, which expires in April, the 20th of April, that we are confident that we'll be out of that status by then, yeah? Because again, we've met all of the requirements to navigate outside of bridge bank. So there'll not be a sale, an immediate sale of the bank. No. We will, there'll be a process to get to that stage. And all of that is, there's a committee that will be looking at that process.
Yeah, the role and how big a role has there been for the Eastern Caribbean Central Bank as regulator of this entity?
Yes, so as a bridge bank, the central bank has an observer on the board. So there's a lot of oversight. But once we move from bridge to a full-fledged commercial bank, we will be independent. Yeah. So we will not have that observer arrangement on the board. I mean, it has been a good, healthy arrangement. But once we get past that, we will be a standalone, with the board fully managing the entity without that oversight. What will continue will be the normal reporting to the regulator, like any other commercial bank would have to. Yeah. But I do not foresee any challenge around us moving from bridge by April to be out of bridge bank status.
Is there any level of oversight by the Financial Services Commission here?
Oh yes. Yeah.
And how much? To what extent?
Because they are another regulator, and more around the AML, anti-money laundering. Yeah. So they would do the oversight in terms of your customer, that aspect. So we are regulated not just by the central bank, but also by the local FSC, who come in and do the inspections, etc.
Yeah.
Yeah.
The bank system upgrade, we had that in recent time. How has that gone? And also I want you to focus, if you will, on the compliance with FATCA regulations. If yes, how much of this? And if no, why not?
Oh yes, so we are in compliance with the FATCA CRS, all the regulatory requirements. We are in compliance. There are no issues around that, meeting regulatory requirement, because that is one of the, as a bank, for us to fully operate, we must be. Yeah, so that is not an issue. We have the regular reporting for FATCA that we do. Yeah. I just lost my...
The bank system upgrade?
Oh, the system upgrade, yes. So we've come a long way. I mean, I want to thank my customers for sticking in with us, for being with us. I mean, I know it was a rough time. As I said, I always I apologize first. I know it was a rough period, but we able to walk through a lot of the issues. There's still one, every now and then you get one, two little glitches happening, but nothing of the past. Yeah, so we are now operating smoothly, I would say. But I will encourage any customer, if you have, we've set up an email address. I'm trying to remember, help me there. Service at ncbal.com, that you can write to us and you'll get a response within 24 hours. So that is service at ncbal.com, and we ask you to just drop us a line so that we can attend to your requests. If there are any burning issues, please, I don't want any customer unhappy. And I mean the customers, if you have interfaced or deal with the bank, we ensure that our customers are happy. And for me, that is paramount. So I don't want any customers out there, if there are still any issues, please reach out. But we have worked through, as I said, all of the issues with the provider, so things are a lot more settled.
The 5th anniversary of the bank, NCBA, is up in April. Anything planned for that particular date? Is there something in the works?
We are planning. I mean, it's a surprise. We're not going to disclose now, but it's a huge milestone, especially where we came from, coming out of two failed banks. There are a lot of questions around whether the NCBA would have survived. I can assure my depositors, stakeholders, that NCBA is here to stay. It's a solid entity. Yeah, with any other bank, there are challenges. I mean, COVID has brought a lot of challenges, and the biggest challenge for the bank is really managing the problem loan portfolio, which is a significant issue for Anguilla as a whole, with the high non-performing loans ratio. But apart from that, again, then we know how we can manage that. Yeah, and so it's to just continue to push on that front. But I mean the five years, and I want to thank our customers have been with us they didn't lose confidence. When we share the numbers, the audited numbers, we'll see that over the last, for the 4 years that we report in, we saw a growth in deposits of 117 million, coming from where we were to the growth, and that speaks to the confidence of the residents, both local and the diaspora. And so we really want to say a huge, thank you for the support, and that you continue to support the bank.
And I want you now to speak to the importance of being financially prepared, and also encouraging persons to have a separate savings account for the unexpected.
Yeah, that's important, even more so now. I call that your a COVID, sort of operating on a COVID budget. I too had to cut back and restructure to maneuver. Yeah, and so it's important. If again, I will start from there are 4 types of people in the world. They are the savers. They don't have any problems. They save. They are the builders. The builders tend to be risk takers. They're the entrepreneurs. So there's a good balance there. So they save because they take risk, measured risk. They are the givers and the spenders. These two individuals would have to make sure that they set up the savings plan, that compulsory savings plan, to ensure that they save. So the givers tend to give and help family, friends, and they help a lot. But there need to be a balance to ensure that out of your income, you're saving at minimum 10% at minimum of that income to put away for rainy days. Yeah, so if say, for instance, persons that have worked 10 years, 15 years, 20 years, COVID hit, if we had done a 5 to 10%, we would have some level of savings, yeah, to help us through that period. So I would definitely encourage, and it starts from your basic budgeting, to allow for that, so you can manage your spend to ensure. And I always tell persons to ensure that see savings as a compulsory expense. A lot of times we don't factor in savings. We have to see the same way we see our mortgage payment or our rent as a compulsory payment. See your savings as compulsory expense.
And that second account.
And that second account can do
the
that.
unaccepted.
Yeah.
Correspondent banking, how has that been? How has that gone?
Yes, so correspondence. So just again to speak to, I mean, sometimes from time to time I listen to programs, and so you hear certain some information coming out. So I'm happy you mentioned correspondent banking. I actually had that as an item to speak to. The NCBA, because just to speak to, the bridge bank status has not affected how we operate. It's a status, but we operate as a normal commercial bank. Yeah. So as a bridge bank, you can do wire transfers. You can offer every banking service as a bridge bank. Yeah. Which we have been we've been offering. So wire transfers to any part of the world we can do. And we have customers that have come. I have one customer that boasts up to today. I mean, he will tell, when you meet him, he'll tell you that he came into the bank the morning to send a wire to China, and by the afternoon, the receiving party had the funds on their account. So there's no, we don't have an issue around wire transfers, around correspondent banking. The bank has been affected as a result of the de-risking of the international banks that happened a few years ago, when the large banks in the US and so forth, they pulled relationship, and the UK. So we had Bank of America when we started. Even under the reference was made to NBA. NBA and CCB, there was no issue of de-risking then. De-risking started a few years ago on the NCBA. On the NCBA, we are affected. And so not just NCBA, right across the more the undeveloped, the countries, right across the region, banks have been affected with the large US and UK banks pulling relationships. And as I said, so we lost Bank of America that we had since the legacy days, legacy bank days. We lost that in, I think, 2017, if I remember clearly. So right now we have one correspondent bank, which is Crown Agents out of the UK, but they would facilitate wires right across the globe for us. Yeah. So a customer can come in and put through a wire transfer, and we can process it. What has happened in terms of check processing? We can no longer negotiate US checks because banks are moving away. A lot of the banks are moving away from physical checks. Everything is paperless. So Crown Agents, that's a service they're not offering. So we're not able to offer it to our customers that we did it under the legacy and the early days of NCBA, when we had Bank of America. So we are in the market. We keep pushing. Once the banks in the US, the larger banks, relook at their risk appetite, and they see the Caribbean as an acceptable risk, then NCBA would be able to rejoin that relationship. But it's not an NCBA issue. De-risking is beyond NCBA, because the Caribbean is seen as high risk, and Anguilla is part of the Caribbean. And so I operated in Montserrat a few years ago. Montserrat was also affected from de-risking. You have banks in Nevis and Antigua, all across, they are affected by de-risking. And as a result, it would affect the ability to issue checks, etc. Yeah, but wiring of funds, a bank like us, we can't facilitate wires. There are no issues around wire transfers, incoming and outgoing.
Yeah. As we prepare to wind up, speak to us about the protection of the bank's assets, and also what's happening with the second branch in South Hill. How have things been going there?
Oh yeah, the second branch is working well. Yeah. It's really just a small service center, so just the teller services, a few customer service, services are offered there. We do not do in terms of loans, etc., those type of services, but just the front line, basic services are offered in the West.
But there's enough to keep that service in place?
In place, yeah. And even in assessing the profitability of that, yeah, it's okay. Once we move from Bridge Bank, we want to do a lot more with the branch, so as time goes by, there are other ideas that the bank we have in terms of going into branching out into other services like wealth management services, offering brokerage services, those other services that we can, because there is a space in the West that we can utilize to do that. And you speak to protection.
Yeah.
The protection is really on the management of the bank, because as a commercial bank, the requirement of the regulator is that we keep 6% of depositors, the deposits that we hold in, as a reserve. So the other 94% has to be on how well the bank is managed. So the management of the bank, and so that's where the safety comes in. So the loans that we offer, so that they have healthy loans ratios, and so even when you look at the legacy entities, the failure of the bank, you had almost 50% of the portfolio of loans portfolio being bad. Again, that's part of your safety net. And if half of your portfolio is bad, it ultimately will affect your depositors because it's assets and liabilities you balance in. And if you don't have enough shareholders equity in terms of net worth, then you can have a mismatch, and that can affect the bank. So it's really balancing all of that, and so that is why even as we go about lending, we have to do that prudently. So even when we have the conversation, personally I would meet with customers just to give the sound advice, because sometimes we take on a mortgage, we had to come home and we got a vast amount of interest coming out of that the come home. But sometimes we have to tailor people's wants, I would call it, to tailor it to what you earn. Because sometimes we want our home, but we want rental, we want everything one time. But it's good to manage those expectations. So sometimes we advise persons to reduce the size of the property that they're looking to build. One, because the income cannot support it. Because owning a home have several elements, several cost elements. You have the property tax you must pay in revenue annually. You have you have to insure that property annually. You have to maintain that property annually. You have to have life insurance for both parties. Every party to a loan have to have insurance up to the value of the loan. So it's a hefty cost that most times we forget. So you build that home and then you realize, Lord, I cannot afford it. So we do a lot of the education, and persons have been receiving it well. But what I tell persons to, that's a 30-year loan, a 25-year loan, and you don't want to be living for a mortgage. A mortgage is one aspect of your life. That you have to plan for children's education, your retirement. You have to plan for being a balanced person, to go on vacation, to live life. So we encourage that level of planning, and that level, we give that level of advice to all our customers, and to ensure that loan meets within the acceptable risk. So we do not take on unnecessary risk to expose the bank. So it's a lot of balancing. It's a tough environment. When some of my friends in other sectors tell me that they're more relaxed, I tell person I'm working overtime, overdrive. You understand? And even for my team, my team has been, it has been a long year into COVID for us, because it's a lot of long hours. We've been trying to discuss balance and going home early and managing your families, and life is about balance. But so I must say I have a fantastic team of persons that really, they push in the mandate, because we have, and all of that is ready to save the bank and safeguard, depositors.
Yeah, and as we pull the curtain on this, Ms. Francois, I just want you to again, very quickly, quick summary of the moratorium and the interest rate payments and encouragement for people who are not working, the sensible approach and coming in and talking to the folks at the bank.
Yeah, so let me start with the persons that are not working. We are there for you. So it's important that you keep close, you keep connected. Every 2 months you come and you have a conversation, what is happening, get a sense what is happening with your loan. And again, when we sit with persons, there are persons that do come in to look for ways and means to see how you can generate income rather than just sitting and waiting. For persons that may not be able to at all, then we again, the moratorium, we will work with you until that time expires. But what I don't want to see is that when September comes, from 1st of October, if the situation has not changed, then those loans will go into non-performing. And it's not just a bad situation for just the customer only, it's an overall bad situation. So we encourage, the conversations early o'clock so that we are aware what is happening. And if whatever little that you're making and you feel that is extra that you can bring into the bank, do that, because we have persons that are doing that. We have the employed persons. I employ you to come in and have that conversation, see what your interest payment is, how you can restart those interest payments, because at the end of the moratorium, it's not going to look good because the interest is still going to be there. And so as much as the moratorium is there to provide financial relief, it's really there for financial relief if you need it. Yeah? But if you earn in and you don't need it, because what I would not want to see is that we earning that income, we're not paying our loan, but where is that income going? Whether we improving our properties with that income, how is that money spent? So it's important because, as I said, the interest remains, and you've lost 12 or 13 months of salaries, because I have that slide I always put up at present when we do presentation. Your salaries reduce over time. So every month is one salary gone, and if you don't make maximum use of it, that's it. So we encourage persons to come to the bank, have their early conversations. If you want to come off moratorium, it's the right time to do it. We can restructure the loan and you can get on your way to, advancing that loan downwards. Yeah? So that's the encouragement. And just overall, I want to thank our customers for their continued support. Those persons that are not on board, to come on board. Yeah? NCBA, we will welcome you, we are the People's Bank. We will work with you in good times and in bad times. And the history shows it. Indigenous banks, local banks work with their customers. It's a fact. You understand? It's a fact. We are not one to pull the rug when things go bad. We work with you. We give you time, until we can see how best it's a win-win for both parties. So if you're not on board, we will welcome you. So we say come home. Mm-hmm.
Sharmaine Francois, Chief Executive Officer of the National Commercial Bank of Anguilla. Thank you so very much for coming and always sharing with us such powerful presentations and vital information. Thank you so very much, Ms. Francois.
Anytime. Yeah,
Thank you so kindly. Yes, folks, here's where we're going to end it for another week, an extended session today, but this was very, very important. So until next week, Wednesday at the same time from just about 10 o'clock, I am Keith Sonegraves. I'm out. Thank you.